Today on Real Life in Real Estate, you know what makes me sick? Hi there and welcome to Real Life in Real Estate. I'm Mark Peebles, here to help you live your best life and achieve ultimate success. And today I want to talk to you about what makes me sick. As the owner of a company and as someone that has met with literally hundreds of agents over the years, what makes me the most sick is when I find out that an agent is not structured right and ultimately they end up in massive tax debt. I hate hearing this. It makes me feel so sad and heartbroken for the agents that I've met with over the years. And why can I say that? I can say it honestly because I was there. So today I want to talk to you about business structure, how to structure your business to save taxes, to save on all the money that we as agents are charged in taxes. And so I want to talk about that. I want to give a disclaimer up front. And that disclaimer is this: I am not a CPA. I'm not your CPA. So I'm not giving you tax advice today, but what I am giving you, I want to spark some interest. I want to get you thinking about the things that you need to do to get your business structured right so that ultimately you don't end up where I was. Now, let me tell you a little bit about my story. Back in my early career, starting in 2008 is when I started in this business. Actually, I'm sorry, 2006. 2008, we all remember what happened. The market crashed. Well, by 2008, when the market crashed, I was already in tax debt to the IRS. Went through some hard years. And let me tell you something. The IRS, they are the most brutal debt collector on the planet. You know, they charge immense fees, crazy interest, and you just don't want to be in debt to the IRS. So went through the crash, terrible time. Ended up, getting out of tax debt through that time, and then coming back in 2014, 2015, I started to get behind on taxes again. I wasn't filing quarterly taxes. I wasn't doing the right things until 2016. I ended up reading a book by Mike Michalowicz. If you Google him, you'll find it. But the name of the book is Profit First. Just Google Profit First by Mike, and guess what? Mike Michalowicz will pop up. You're probably not going to ever spell his name right. I think his website is like motorbikemike.com or something crazy like that because his name is tough to spell. But I read this book, Profit First, and Profit First laid out this thought process. It was a paradigm shift for me that, all of my money goes into one place and I would then be like, oh, I made $50,000 this month because we have those feast or famine times when we're in this business. So all this money would hit my account. I would be like, boom, we are in the money. And then I would spend it all. I didn't set anything aside for taxes. I wasn't moving money into the right places. And ultimately, I get back behind. So when I read this Profit First book by Mike Michalowicz, he says that you start by setting aside your profit first. So whether that's, 5% or 10% of your total gross income, you're setting aside your profit first. So 2016, I had also been introduced to this need to have an S Corp. Actually, towards the end of 2015, I was introduced to this need for an S Corp because I would save on taxes. So I got that structured right. I started doing things right there. And then I started operating by Profit First so that when it came time to pay my taxes, I would have the money sitting there ready to be paid out of my account. And I want to just say, at the end of 2016, December of that year, I stroked my last check to the IRS, and I've never been in debt to the IRS again. So I want to talk to you about how I did it, about the exact process that I went through. Again, I'm not here to advise you as a tax advisor. You need to talk to your CPA. You need to make sure you're comfortable with using these structures. But I want to talk to you about things that I wish I had known earlier in my career and had started following. I had actually been exposed to all of this earlier in my career, but I was mentored by my dad, who's been in the business for over 50 years. And honestly, he was always afraid of these kind of models because it required doing payroll and payroll taxes and all of that. And so I never got into it. And finally, someone got through to me, my thick skull, and started me down the right path. So here is what I want to recommend. Number one, if you are in this business, you need an LLC. All right. So first things first, let's get a business entity started. And there are some benefits to an LLC. It's a limited liability company. And basically, when you have an LLC, you are able to separate your personal assets from business assets. One of the reasons it's important to do this is because we're in a business where there are instances of litigation. Now, knock on wood, and this is composite that I'm sitting on, so this is not real wood that I'm knocking on. I don't know what to do. No, but realistically, we're in a business where there's a lot of litigation. Knock on wood, I've never been in any kind of litigation where I have actually been sued by a past client or sued as part of a transaction. Not to say that it couldn't happen. It can. And that's why we want to have an LLC to help mitigate our liability, our legal risks. So you set up an LLC. You obtain an EIN, employer identification number. This comes straight from the IRS. Once you have your LLC set up, it is very simple to set up your EIN through the IRS. And then the last thing is you open your business bank account, or in my case, it's your bank accounts, right? So you want to have, in the case that I'm going to teach you, multiple business bank accounts. All right, so we get our LLC set up. This way, if you have anyone that does file a lawsuit, names you in a lawsuit, they're actually naming the entity that you practice under for your real estate, and you have some protection. Now, the way that you need to do this is when you sign on to your brokerage. Again, I'm not your attorney either, so you would have to make the decision with an attorney on how to do this. But that said, you would have your LLC, and when you get paid from your brokerage, it's not going to Mark Peebles. It is going to Mark Peebles LLC. Okay, so you are getting paid from your broker to your LLC, not to you personally. Okay, so that's how you get that veil of protection when it comes to having a limited liability company. All right. Now, you're still working for a broker. Okay, so in my case, I own Navex Realty, but I still pay my corporate entity from Navex Realty when I have a closing, when I make a sale. All right, so the other thing, another benefit of the LLC is it separates out your finances. So one of the things that I see agents do all the time is they are using their personal credit card or their personal debit card to pay business expenses. Well, then you have to separate all of that out at the end of the year. So separating your finances makes it much easier. You have your business accounts where you run all of your business finances, and then you have your personal accounts where you are paying your personal expenses, your mortgage, your utilities. All of those things come out of your personal accounts. On the business side, you might pay for leads somewhere. You might, if you follow my system, you're paying for some postcards. You are paying for maybe a CRM system, right? You are going to have business expenses that you're paying out of that account. So it separates your finances. I think that is another big benefit of having an LLC. It also gives you the opportunity to apply for business credit. having some business credit available is not always a bad thing. I'm not a big fan of having, huge credit lines and running up debt. You need to be very cautious about that. Be cautious with any debt that you're taking on, but it does give you that option to have a line of credit, especially as you start to build a team. That becomes more important because you get into a slow season and you might need extra revenue, or you don't have the revenue to meet payroll, and that's where you might have a line of credit available. It allows you to get a business credit card, right? So you might get a credit card that you run all of your expenses through. I have an Amex, a corporate Amex that I use, and I get some points on that corporate Amex, and I do my best to keep that paid off every single month. So it opens up that opportunity to have business credit lines, all right? Okay, so that is the LLC that you have started. Now, where do we get tax benefits out of having an LLC? Because when you have an LLC, isn't it the case that you are paying taxes as if you're a sole proprietor? And the answer is yes, you are, right? And so where the tax benefit comes in is when that LLC becomes taxed as an S Corp. Now, there's a form that needs to be filed. I had my CPA file for all of this for me, but that form will change the way that you're taxed from sole proprietor to an S Corp. It's very important that that gets filed, and it's very important that your CPA has overseen it, because you don't want to make a mistake on that. You have different filings that can happen off of that form. Like you could file to be taxed as a C Corp. Very different. You do not want that. You want an S Corp, a small business corp, in terms of how you are taxed. So you are still an LLC, but you are taxed as an S Corp. Again, I remind you, anything I talk about today, talk to an attorney, talk to your CPA. I'm not giving you advice. I'm just telling you this is what I did. So you get your LLC set up to be taxed as an S Corp. Now, how do you save the taxes? Well, if you are currently an employee, what happens to you as an employee? Just say you're an employee of a bank, okay, and you work as a teller. I'm making it up. You might work in some other line of business, or you have another job. Maybe you're a nurse, right? When you get paid, you don't see 100% of your money. Have you ever noticed that the IRS gets a portion of that, right? So your company is actually withholding your taxes when they pay you payroll. Now, in business, what a lot of people don't realize is there's actually another side to the taxes. You are actually paying a portion of your taxes. That's what gets withheld out of your paycheck, and you get, what is left over of that. So if you're paid $1,000 on payroll, you might only see $700 of it or $750 of it. Well, did you know that your employer is actually paying additional taxes on your behalf? So while, your pay is $1,000, I'm using nice round numbers, you actually cost your employer, $1,200, right? Because they are paying a portion of your taxes. Now, when you are self-employed, like we are as realtors, when you are a sole proprietor or just a plain LLC, you are responsible for all of those payroll taxes, right? You don't have a company that's paying that for you. We call it a self-employment tax, all right? So when we get those checks, we have that big month and we make $20,000 in a month. The problem is we are paying all of the taxes, and oftentimes with agents, they are not paying all of the taxes on that. Instead, they see the full $20,000 and they spend the full $20,000. With an S Corp, what happens is now you open yourself up to where you can pay yourself payroll. And when you pay yourself payroll, you are withholding your taxes that would normally be withheld from you. You're also paying the corporate side of the taxes on that payroll. And this is what I love and what changed my world. I was afraid of all of this. I didn't like the bookkeeping part of it, and there is some bookkeeping to this. Okay, so that's probably one of the challenges, one of the downfalls to having an LLC is you do have to do some bookkeeping. But what happened is I hired a payroll company to pay me my payroll every month. So let's just say you have a budget, you want $5,000 a month to use towards paying all of your bills. The requirement by the IRS is that you must pay yourself a reasonable wage. So that's, again, work with your CPA on that. But if you're going to make $100,000 this year, you might pay yourself, $4,000 or $5,000 a month in payroll. You're paying some taxes on that, your personal payroll taxes, and then your LLC is paying the other part of those payroll taxes. So now you're paying taxes. The payroll company, this is what I love about it, they pull all of the taxes out of my account, direct deposit the rest into my personal account. They hold it. They file the quarterlies for me. I don't have to do any of that. And that's why I like having a payroll company. I think I pay $75 a month to have that payroll company take care of all of that for me. Now, $100,000. If you are making $100,000, which I just had a conversation with a CPA last week, and she said if you're going to make $100,000, that's where you really need to have this LLC tax as an S Corp strategy. So by the time you pay yourself $50,000 or $60,000 a year, you're going to have an extra, call it $40,000 left over. There is some payroll tax that comes out of that. What do I do with that $40,000 and how am I really saving taxes? Well, here's the brilliant thing. Out of that $40,000, you're paying some business expenses, right? You might be paying for a vehicle. You might be paying for a lead ad spend. You might be paying for, other various expenses that we have in this business. All right, so let's just say you're spending $10,000 on it, and that takes that 40 down to 30. Well, you don't want to pay the full taxes on that 30 as a self-employed individual. So what you do is you take owner distributions. I literally write myself checks. Now, as I say this, I'm sitting in the room with two millennials who are, no, not two millennials. Oh, I don't have two millennials. I have a Gen Zer in the room. She really doesn't know what a checkbook is or how to go through the register and balance it. I'm kidding. They're making faces at me back here, right? Is it okay if I talk like that? So no, here's the deal though. You might be like, I have to write checks. Well, that's how I do it. And when I write myself a check, I am actually writing out the check to Mark Peebles. I write in the memo line, owner distribution. And when I do that and I make that deposit into my account, that is not subject to the additional self-employment tax. So I'm essentially on that money saving an additional 15% on taxes. Now, what I do deposit into my account, right, on that owner distribution, I am responsible for taxes on that. I do have to pay taxes on that. So you don't get out of taxes, but you save the portion of taxes that your corporation is normally responsible for. So I take those owner distributions, all right? So as we start, let me give you a summary, and then I'm going to do a second episode to really get into profit first. But here's how it works. You're going to set up an LLC day one, whether or not you are going to structure as an S Corp yet. Remember, you need to be making right around $100,000 before any of the S Corp portion really makes sense. Set up your LLC though. Make sure that your company or your brokerage is paying your LLC. Okay, so you've got that veil of protection in your LLC, limited liability company. Then you can still pay yourself payroll at this point where your payroll company is going to withhold taxes, right? They're going to take care of all of that. So you can consider doing that as well, right? It's when you get to the point where you're ready for the S Corp that now you're going to start taking those owner distributions and really saving on taxes. Here's what I'm going to tell you. A lot of this can be confusing. I know I feel like a little bit in the weeds trying to explain all of this to you, but I hope, if nothing else today, I've gotten your wheels turning to be like, I probably need to talk to someone about this. Now, when you talk to your CPA, If they say, if you're making $100,000 a year selling real estate, in other words, $100,000 of commission is coming to you every year, and they say, no, you really need to be closer to 200, I'm going to venture to say you probably have the wrong CPA, right? A lot of CPAs don't understand us as realtors, right? And so you need to have a CPA or an enrolled agent and an accountant that can help you through this, help you understand how all of this works so that ultimately you can save tax dollars. I've sat with agents over the years where if they had this in practice, they're $30,000, $40,000 in tax debt. Had they had this in practice, that number would have been cut in half. Now, what's going to happen on the next episode is I'm going to share with you, how do I ensure that I have that money there to pay my taxes? And so that's what we're going to get into next time. I'm going to tell you exactly how I did it, exactly how in 2016, at the end of the year, I stroked my last check to the IRS and have not been in debt to them since. So come back next week because you're going to want to hear how I did that. And if nothing else, I want to save you money and take away the stress, what makes me sick about all of this, of being in debt to the IRS. All right, so that's my word of advice for today, and I'll see you next week. Bye now.